We've been talking about the fact that right now is a really good time to buy rental properties because we believe that in the short to medium term, interest rates are going to drop. When interest rates drop, all the demand that's been sitting on the sideline is going to jump in and they're going to buy homes, meaning home price appreciation is baked in for you to get in and you can refinance later. But the nuanced argument is, wait a minute. If people are going to go crazy bonkers bananas buying homes, does that mean that the rental pool is going down? Is there an inverse relationship between rental prices and home prices? What do you say to that, GC?
Well, I think that we are constantly searching for like what is going to lead to some part of real estate going down. It's almost like we just assume that that happens a lot or every so often. And as we just talked about on show, real estate is not so much a cycle like you might think of other assets being a cycle, where a period of up, 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 and then a period of down. Real estate is more of a recurring pattern of growth. And so the answer to your question, actually, if you go back and look at the data, is that home prices and rents tend to both go up with the rate of inflation. And when one goes up, it does not mean that the other goes down. So I think we have to kind of like break this mental fixation that we have on rents going down or home prices crashing or all the talking heads have been saying for years and years and years now. It's been debunked. Hasn't happened, because real estate is based on supply and demand. And the reality is that we have a whole lot of people that are moving to our country and want to be in our country. And we continue to have a whole lot of families and households that are formed. And that is demand for housing. And right now, we are undersupplied for housing. And when you have too little of something and you have a whole lot of people that want it, that in a worst case scenario keeps a high floor for that pricing. And in a best case scenario, that leads to substantial growth. And, that's really what we have seen for home prices and rents up until this point.
Yeah.
That high floor has continued to happen even through 2023, when interest rates rose to almost 8%. So the answer is no. When home prices go up, that does not mean rents go down or vice versa. In fact, the data says otherwise.
I like that you went to what we talked about before, this idea that real estate is a recurring pattern of growth. I think that within this question of do rents go down when prices go up is that errant kind of like lens that we have around markets that we believe are cyclical. And real estate is a cycle, and they use cycle, but then when we say cycle, everybody thinks by the dip when you say cycle.
Right.
And you add that to the cognitive bias of we just lived through this like one black swan event that happened in 2008. We all still remember it like as if it was yesterday. And it was the one time that prices dropped and there actually was a dip for a short amount of time. But the reality of the matter is that that is such an extraordinary event that even the most, the institutions failed because they would never believe that that would actually happen. And it happened because we reduced regulations and we allowed all this stuff. But we quickly learned that, as long as there is enough regulations, this dip is very, very not likely. It's going to continue to be a recurring pattern of growth. And therefore, rents and real estate prices will continue to go up.
Yeah, it was a perfect storm of problems that were created in 2008. And at the core of it, the real estate industry and the lending world was the creation of the Great Recession. Real estate and lending caused the Great Recession. But that's not typically how recessions are caused. And if you can separate that abnormality from the rest of the way the economy has worked in good times and in bad times, what you'll find is that rents generally go up slowly and home prices generally go up slowly. And so if you can have that type of an asset that's that slow growth pattern, the beautiful thing is then you can apply leverage to that. So you get the benefits of slow, consistent growth, not this cycle, not this cyclical part. So you get that slow, consistent growth. You apply leverage, you learn how to use debt to your advantage, and now you're able to get above average returns as well. And that's really what we talk a lot about in the show.
Got it.